Okay. So for those of you just joining us, good morning again. Good morning and welcome to our 2021 Buyers Fair. We are here today to gain some information about home ownership and just hear a little bit of the update that's going on in today's market. As I stated, I brought along a few friends. So we have some panel experts, and that's what we're going to start today. Today, we're going to start with a panel of experts. I'm going to give you a little bit of an overview of what you're expecting to receive from us today. As stated previously, my name is Letitia Grant. I'm a real estate broker. And today, during the event, we're going to host a panel. And it's going to be a small panel for a brief period of time. But I do think that it's important because although your desire is to qualify for the down payment assistance, you will also want to know what it takes to even get approved for the loan. Because just because you have the assistance doesn't guarantee you the mortgage. So they are not directly connected. So who do I have with me today? We're going to go ahead and get started with Miss Karen Newman, who is a loan originator from NRL Mortgage. Good morning, Karen.
Good morning, everyone. How are you?
Doing well, doing well. And guys, this is not a total formal class. So if you have some questions, feel free, raise your hand, make a move, break dance a little bit, whatever it is that you need to do for me to get your attention, so that you can get my attention. We also have with us Miss Allison Griffin, which is an originating branch manager of CrossCountry Mortgage LLC. Good morning, Allison.
Good morning, everybody.
Thank you for joining us, lady.
You bet.
And then, of course, we can't do this without our inspector, Mr. Abner Brown, our check inspector with Arsenal Inspection Services. And many of you, good morning, Abner. You may be asking, why did we bring along some friends? Again, as I stated, it's going to be important for you to know not only can you qualify for these monies that are out there, it's going to be important for you to know the how-tos. And that's what we're going to dive straight into. I'm not here to waste your time today. I know it's Saturday. It looks like it may rain, and many of us want to get out there and get our day started before the rain hits. Abner's looking. Abner, is it about to rain?
I have no idea. Looks like it.
So with that being said, I want to go ahead and dive right into it. And what we're going to get started with is we're going to start talking about what's going on in today's market with these interest rates. And we're going to pose that first question to Karen. Karen, today's market rates, what are we looking like for interest rates at this time?
Right now, since it's at the beginning of the year, we have kind of seen, a little bit of an uptick, but not so much. I would say you can find a range of scores. Interest rates right now between maybe 2.5 to 3.5. Sometimes in the 4%, 4.25% range if you're at the lower spectrum. On your credit scores. And so, but we're still, it's still a good market, I think. I was just, saying to someone yesterday, even, worst case at 4% is still, it's considered bad in this market, but overall, it's not really a bad rate. 10, 12 years ago, we were looking at 4.5%. So we're still holding, and I'm excited about it.
Now, what are the things that are driving a consumer's interest rate? So you're saying that some people could be looking at a 4%, whereas many are looking in the low 3s, and I don't know, maybe even high 2s. So would the FICO score be one of the driving forces?
Absolutely. And, once again, it just depends because, like I said, a lot of lenders have different types of products or whatever that they offer. And many of them are based on FICO scores and those calculations. For the most part, you're looking at a range of scores from, with FHA financing, some of your government products even will go down to a mid score of 500. Whereas, in my opinion, even though, conventional products say that you can start with a mid score of 620. It's mostly recommended that you be at least 660 or above. And of course, FHA, in order for you not to have, because of COVID, I think a lot of lenders started adding what we call in the industry overlays. And so those overlays pretty much are going to apply for anything pretty much that's under maybe 640. And so I always recommend, in order for you to have the best options for financing, you really want to try to achieve a mid score of no less than maybe 620 to 640 or better. Now, the better, the higher the better, but at least 620 to 640, because when you get below that, it really, you're going to pay out of pocket based on that.
So that pay out of pocket, that takes us to Allison. Allison, I want you to kind of add on for our audience. Karen brought up a very interesting point about a lower credit score. And if you have this lower credit score, you're going to pay out of pocket. How does that affect an individual that's looking to qualify utilizing down payment assistance?
Well, most of the down payment assistance require a 580 or higher, correct? Karen, isn't that what you find?
I would say really around 620 or higher.
Correct.
Well, you have some programs like the city of Houston in Harris County, but that will take a 580. So yeah, 580.
Right, and usually when we have the 580, even then it won't fit their criteria. So I'm with you. I usually tell everybody 620 or 640 or higher. Because keep in mind, there's more than just credit to a mortgage application. When I got in the business many years ago, my boss told me it was the CIA method, credit income assets. And they're fairly equally weighted. So I get a question, I'm sure you do too, Karen, and feel free to chime in, that it's great if you've got great credit, but if you don't have strong income, you don't have any assets, then we can't approve the loan. The reverse is true if I've got weak credit, meaning below a 620, but I've got really good income. And when I say really good income, that's defined as 3 years or longer on the current job. My debt to income ratios are below 40%. And it's stable income, right? So I don't have big fluctuations. I don't have a bunch of overtime. Maybe I worked in Port of Houston one year and I made 20,000 overtime, but the next year I made 10,000. And that person was able to save money. When we say save money, enough that they're paying the full 9% out of pocket to buy a house. So even though the down payment might be 3 to 3.5%, your total out of pocket, if the seller doesn't pay any closing costs, thank you, Karen, you're nodding. Yeah,
pretty much.
Yeah, I tell everybody, rule of thumb's 9%. So, can we do credit scores lower? CrossCountry is a nationwide lender. We don't have quote unquote overlays per se, but that doesn't mean that you can automatically get a 550 approved, because what I find is then I've got income issues, I've got asset issues, I've got other things with that. So general rule of thumb, get your credit score above 620, you get the better interest rates, you get better terms of the loan, and usually it's not that hard to get there. What have you found, Karen, on that part?
Well, as far as credit, it just depends on history. And as you and I know, there's no two profiles that are exactly the same. Paying on time, it's just, that is the simplest, easiest thing to do. I understand life situations happen. And we've all experienced that, industry-wide. Life happens sometimes, and you run into things that sometimes you can't avoid. However, making course corrections and maintaining those course corrections, because you have to understand, for most people, a mortgage, you're asking someone to loan you hundreds of thousands of dollars and over a period of 30 years. And so, yes, we've never met you. I tell people all the time, it's just like a relationship. We have to get to know you. We have to court you a little bit and kind of see if we think this relationship is going to make it, at least 10, 15 years, which, is about average for most people, with first mortgages. So, yes,
we gotta get your business
is key.
Yeah. No, you're exactly right. So Was there something else you wanted me to add to that, Letitia?
No, that is actually exactly what I was looking for. And so what we've identified is, yes, you can obtain a mortgage at a 580 credit score. However, we can't guarantee you that that's going to be first of all, buying a home alone is probably one of the toughest processes that you're going to go through. Having a 580 credit score would just make it a little tougher. We can't guarantee you a smooth and easy process at that credit score. However, what you guys also stated is you can obtain down payment assistance utilizing that lower or that 580 credit score, but it just makes for a better process with a higher at the 620 at the 640 score. So I think that's perfect. But in addition to that, and Karen and Allison, both of you can kind of chime in on this. If I apply with you all today and I'm not granted a mortgage loan today, what are some of the things that I can do, or what would you suggest for me to go back and take a look at to see what can I do to obtain a mortgage loan?
Well, that's a broad question, Letitia.
Yep. Yep.
So let me break it down.
Mm-hmm.
Usually the issue is credit. Would you agree, Karen?
Yes, in most cases, yes.
Okay. So what I want to address is that most people may not know in the general public is people that are loan officers like Karen and myself, we're licensed. And under our licensing agreement, we're not supposed to act the capacity of credit repair people. Right, Karen?
Yeah, absolutely.
Yep. So, and I know some of my customers get real frustrated because, well, why can't you tell me? Well, because my license says I can't, and then I'm in the position of quote unquote manipulating credit. So what we can do is we will run what's called a credit simulator for you, which really is not me saying what's happening. It's an automated system. We just can't speak to that credit simulation. I can send you what it says. If you do these things, great. And typically my office, I've got a few people that work for me, will go through the credit, say, pay down this debt, get this collection deleted. And then usually my realtor partner will follow up with them because they're not going to fall under that umbrella that Karen and I are as licensed loan officers, originators. So, and usually my rule of thumb is if you're at a 580, typically it's going to take you 30 to 60 days to get your score up. That you say that's about right, Karen?
Yeah, usually 60 to 90 most cases.
Yeah, well, just a bit. Yeah. So, you know, sometimes I see tiny little collections, they get deleted and I've got it done in 3 weeks. It is all up to the buyer and how tenacious that buyer is. I've seen the same profile and it doesn't matter socioeconomic status. I've seen people looking to buy a $500,000 home and can't freaking figure it out and it takes them 4 months. And I've seen my little baby buyers that are Section 8 housing and working 2 jobs and they get it done in 3 weeks.
You know, Allison, so I'm glad that you brought up that point. And I know oftentimes when we host events such as this, people make an assumption that we are catering to one specific buyer profile. And the good part about the panel that we have before you all today, and I want to tell our audience, is they have worked with every spectrum, from every spectrum of the home buyer, from your affordable to your luxury home buyer. So that's the positive. And what they're sharing, or the information that they're sharing with you, is going to be standard information that they're receiving across the board. Now, when you get into your jumbo loans, they're going to look a little different, but for the most part, getting to the loan is going to work very, very similar. Okay.
Right.
Now, we said the number one issue for obtaining approval, and this is before we move into Abner, is going to be credit. But we also find debt to income ratio to be an issue as well. And I'm going to break it up. Allison, can you explain to our audience what is a front end ratio? And Karen, tell us what is a back end ratio.
Sure. So front ratio, or the housing ratio, is in lending, we look at cash flow. So we're looking at what will meet the guidelines of stable income for our underwriting team and what the agencies require versus how much is that monthly mortgage payment. So if it's, I make $3,000 a month and my mortgage payment's $1,000, that should be 33%, right? Mm-hmm. So that should fit the criteria of an FHA or conventional loan. Typically, we don't want to see the front ratio or the housing ratio any higher than 40% of your income. Not to say we haven't approved them higher, but it typically will put that buyer at risk. And the other thing we look at in conjunction with the housing ratio is, what is the housing shock? Back when probably Karen and I first got in the business, we had to deal with housing shock a lot. We don't hear it a whole lot today, but it's starting to come back the more we do these manual underwrites. And what that means is, if you've been paying $1,000 a month and you're going to $1,000 a month, you as that buyer have already figured out how to budget your household income and your assets. If you've been living with mom and dad and you've got no savings, and all of a sudden you're going to start making the $1,000 payment, you have a high risk of default because you haven't been prepared in your budget. And that I've seen it. I've been doing this 30 years, and I've seen it where someone has an 800 credit score and they go through housing shock and they'll show up on my slow pay report. I'm sorry.
Oh no, I didn't say anything.
Oh, I thought someone said something. So anyway, so that's the housing piece.
Okay, perfect. Thank you, Allison. Karen?
Well,
You're welcome.
and as far as debt to income ratios, what I usually tell potential clients or my clients that I'm working with is that the easiest way, the best way to determine your debt to income ratio or how much home you can afford is simply by taking 45% of your monthly gross income, subtract the minimum monthly payments of what you already have, less, of course, utilities and rent, because obviously when you become a homeowner, you're not going to be paying rent. And even though you will have utility expense, most loan products, conventional FHA, don't take utilities into consideration, although, VA does kind of look at that, but that's, a kind of different product or different, that's a different category. But anyway, if you take 45% of your monthly gross income, subtract your minimum monthly payments on your installment debt, your revolving credit, automobile loans, things of that nature, whatever that difference is how much you have left over for your mortgage payment. Okay. And so, because basically what the total debt to income ratio is it's a combination of the proposed monthly mortgage payment plus your existing monthly obligations as it pertains to your monthly gross income. And the 45% is a good starting point. That's not to say that, because some loan products, depending on, like Allison said, other characteristics of your files, sometimes we're able to extend ratios, beyond 45%. I can remember, pre-COVID, in some instances, we were able to get people approved at 55, 56% debt to income ratios, but that is the exception and not the rule. So 45% is a good starting point, I think, for most people.
Good deal. Good deal. Thank you. Thank you. Cameron Parker raised their hand. Cameron?
Hi. I was just wondering, are school loans incorporated in that debt?
Absolutely. Student loans.
Okay, go ahead, Karen.
Okay. Student loans are issued for a lot of people right now. Depending on the type of loan that you're doing, whether it be FHA, VA, or conventional, how those student loans are treated will vary. For the most part, if your loans are in repayment and they are under a fully amortized fixed payment, meaning that based on whatever the interest rate is that's determined on your financing, the balance of your loans, that based on that monthly payment, that loan is going to mature or pay off at some point for a set term, whether that be 20, 25, 30 years, however long. That's what's considered a fully amortized fixed payment. Okay. Some student loan providers are, in order to, give, borrowers some relief, they are looking at, income-based repayment plans, where basically what they do is you submit an application, they go in and they take a look at your income and your other obligations, and they, determine what your monthly payment will be on your student loan based on that information. Now, of course, that's something that's evaluated typically on an annual basis. Sometimes that payment is relatively low. Sometimes that payment may even be zero, okay? With certain types of financing, such as conventional, if you are under an income-based repayment, then yes, if the payment is determined to be zero, then that's what we use in the qualification, but that is only for conventional financing. So to answer the question, yes, student loans are definitely a consideration. The status of those student loans makes a difference, whether it's in repayment or if it's in forbearance. For the most part, if it is in forbearance, which means that you're not paying it or you're on an in-school deferment, we're going to take 1% of that outstanding balance, with the exception of VA. We're going to take 1% of that outstanding balance, and we are going to include that in your debt, in calculating your debt to income ratio.
Perfect. Well, good deal. That was a lot of information. Thank you, Karen. That was amazing. No. It's actually perfect. So thank you for and thank you, Cameron, for asking that question, because student loans, believe it or not, it comes up very often, and especially within our millennial population. That's the group that has gone to school, and many of them, and African Americans specifically, are in school much longer than any other race. So we know that student loans are a barrier for home ownership. And I'd like to shout out to House in the Car for gathering that information and that data. Stephanie now serves as the chair for House in the Car nationally. So thanks, Stephanie. Stephanie Milburn, who's on the call. And moving right along, because what I want to do before I get there is, Karen and Allison, if you guys don't mind plugging in your information in the chat, just in case the audience had more questions that they forgot to ask, so that they can reach out to you directly. But we're going to get into some good stuff. For those of you that joined us late, my name is Letitia Grant. I'm Executive Managing Broker here at TAS Realty Group. I'm a real estate broker, and I operate a full service real estate firm. We have 14 agents here. So our job, of course, is to place people in houses. But after you get there, we want to make sure that you're able to maintain it, which also means that you need to know what you're getting into, which is exactly why we have Mr. Abner Brown on the line today. Welcome, Abner, to our virtual stage.
Hey, how you doing?
Hey, Abner. So here we are. We have selected a home. We've made it through that whole long process with Karen and Allison. And I tell you what, once you have a loan approval in your hand, it's almost having a winning lottery ticket, right? So now they have that winning lottery ticket. They can't come here to TAS Realty Group, and they're working with one of the agents, such as Stephanie. I see Alicia on the line. I see Veronica on the line. They locate a home that they've fallen in love with. And then they're told, call Abner so that he can inspect the home. Now, the first question I get is, what in the world is Abner looking for? Abner, what are you looking for in a home inspection?
I'm looking for everything. I'm looking to make sure that your roof is not leaking. I'm making sure that your foundation's in good shape, making sure that the house is wired correctly, that your plumbing, when you turn on the faucet, that you're actually getting water at that faucet, or your bathtub or your shower. I'm checking to make sure that your AC and your heating is working properly, especially AC, because we live in Houston. We know it gets extremely hot here, and AC is a must. We do check the heat for the 2 days of winter that we actually get. And then I check all the built-in appliances. Built-in appliances meaning like your garage door opener, your dishwasher, your garbage disposal, bath fans, your range unit, the oven and the cooktop. I'm looking at all of those things to make sure that they're operating properly. So when you get into your house, you're not finding something that actually turns out to be a money pit. Sometimes you'll find a house that you love and you want to go ahead and go with it, but there are some things wrong. And then at that point, that's when your option period comes in handy, because your agent can go ahead and make negotiations on your behalf with the seller to either get these things fixed or to give you money to have them fixed, because they won't do it themselves. Or you can decide, you know, hey, this is way too much stuff for me to worry about. Maybe I'll keep looking for a house. But my
Mhm.
job is basically to go in and test drive the house for you. You know, when you go to the car dealership and you see a car that you like, the first thing that the salesman is going to do is he's going to go grab the keys and he's going to say, let's take a ride. And in some cases, they may even let you take the car home for a night. Well, they're not going to let you stay in their house for a night.
Mhm.
And they might not let you walk around the house unattended for 3 hours like they would me. I'm licensed with the state, so I'm able to go in there and basically kick the tires for you. And that's what I do. And after the inspection is complete, within 2 to 3 hours after the inspection is complete, I provide you a complete written report with pictures and video if necessary of everything that I've seen. Plus, I make myself available. If you cannot make it to the inspection, I'll be there, you know, available on the phone for you. And I'll go over the report with you and explain everything in that report so you get a good idea of what you're getting. A lot of people are able to make it to the inspection, usually at the end of the inspection, and I'm able to walk you through everything that I found and kind of explain things that you may not understand how they work. So that's basically what happens with a home inspection. We're there to make sure that you have all the information you need to go ahead and make an informed decision as to whether or not this is the house for you, if this is something that you want to proceed with. And then the information that we get from that inspection report, your realtor gets that, and then they know how to proceed with negotiations and what they can ask for.
Gotcha. Thank you, Abner. The one thing Abner failed to mention is he has one of the coolest toys to inspect the roof. He has a drone that he utilizes to inspect the roof, and it also takes pictures. So every now and then we'll get this beautiful aerial photo of our area for the inspection. So thank you, Abner. We always appreciate you and with everything that you do.
No
The
problem.
next question is about how much is an inspection, because we have to, and we talked about debt to income ratio at the first segment. We have to plan, so we know we need an inspection based on everything that you just told us that you do. How
Mhm.
much do we need to save back?
Um, the rule of thumb for inspections is usually $100 per square. Well, not $100 per square foot, but we charge per square foot. Uh, some inspectors do it differently. Now, when I said $100, actually what I meant an hour for every 1,000 square feet. I'm thinking about calculation of time to how long it takes to do the inspection. So if you had an inspection that was like 3,000 square feet, you know, you're looking at roughly about 3 hours, and then tack on maybe an hour for the outside of the house. But I digress. Usually with my inspections, I start with a flat rate, and I think it works out pretty good. My inspection started at 375 for anything 2,000 square feet or under. And then for every 200 square feet you go up, I go up an additional 20, I believe it's $25, $25 for every
Okay.
200 square feet that you go up. So let's say you have something that's 3,000, well, 2,000 square feet, that's 375. And then it goes up about $25. So then the next would be 22 to 2,400 square feet. That would be $400. Uh, every inspector has their own price. My deal is, you know, a lot of times people look for the cheapest inspector. Don't do that.
Yeah.
Whatever you do, don't do that. You literally get what you pay for. If you find a guy that's charging you 250 to do an inspection on a house that's 3,000 square feet, um, he may not be there long enough to see everything that he needs to see, because in order for him to make money, even though he's charging you know, low cost in order to beat everybody else, he still has to do more than everybody else. With me, I can guarantee you when I go into a house, you're the only client that I have for that day.
Mhm.
I only do one inspection a day. I tried doing a two a day thing and I didn't like it
Yeah.
because I ended up rushing through my first inspection with my first client to get to the second one. And I feel that if you're going to get my, if you're going to hire me, you deserve to have me there taking care of business for you for as long as it takes. So that's the one thing about it. But again, usually inspections usually start at a range anywhere between $300 to $400, and then they go up. But definitely, when you find the house that you're looking for, know that you're going to have to find somebody. So I would set aside a minimum of $300, and then just kind of go from there.
Good deal. Now, for your professional recommendation, in your opinion, would you advise someone to get an inspection for new construction as well?
Definitely. I have my own story about my own house.
Yeah.
We built our house. Back then, I was not an inspector. I was working in television at the time. And the day we moved into the house, is kind of funny. I kept noticing something was weird about our front entryway. Couldn't figure it out for the life of me. I kept trying to tell my wife, "Hey, something's weird. I can't figure it out, and it's bothering me." And she's like, "We're moving into the house. Pick up some more boxes and just shut up." So at that point, you listen to the boss and you pick up the boxes and keep it moving. The thing about it was, back then, of course, working in television, I had different days off from everybody else. So one Wednesday morning, which was my day off, I decided I'm gonna sit here and look until I figure out what's going on. So I sat there for about 20 minutes, and I realized they framed the front door wrong. And then they cheated the window above it to make it look almost right, but it wasn't. And then you could tell, because when the weather would change, the door would stick. So it'd be hard to open and close it. And so we told the builder came back out, and they tried to fix everything, but because of certain things going on, they wasn't able to get it quite the way they needed it to. So that being said, that was a brand new house. My advice is definitely get any house that you're moving into inspected, because again, there are things that you cannot see that may or may not be done. Or there are things that in the process of building the house might have come apart or been broken and nobody said anything. And then when you move into the house, you realize, hey, there's something wrong here. So
Gotcha.
that is definitely my advice. If you're getting a brand new house, definitely get it inspected.
Perfect. Thank you, Abner. Now I'm going to look to our attendees to see if you all have any questions, because we're going to shut it down on Facebook Live, and we're going to get into the Chodo program, where we'll discuss the $70,000 in down payment assistance, what it looks like, and where you can obtain that at. So does anyone have any questions for Abner, for Karen, or for Allison? And again, they will have their contact information in the chat, so check there for their information as well. All right, good deal. Well, that is not a problem, guys. So I am going to go ahead and stop our live stream. Okay. All right, everyone. So here we are. Here's, I think, what many of you came here for, but of course we couldn't give you this without getting you to this place, which is, of course, everyone must qualify for a home loan. That's probably one of the most important pieces in home ownership. Allison, would you not agree?
I agree.
So you must fall in love with your lender. So falling in love with your lender is probably top priority. So we're going to go ahead and start talking about City of Houston Chodo program, which is the Community Housing Development Organization. And I want to go ahead and kind of give you some tips. What is Chodo? And in partnership with the City of Houston, nonprofit organizations have had the opportunity to purchase a lot for $1. They must agree to construct an affordable home and sell it to an affordable buyer. The max area median income is 80% for the buyer, and they must meet the standard underwriting guidelines for the City of Houston. Those things don't change. And I've listed those things there. So some of the things we kind of talked about a little bit earlier, one being that debt to income ratio. So whenever you see 33/43, that is exactly what Karen and Allison spoke to you about. That's your front end ratio versus your back end ratio. So your front end ratio to qualify for this particular product cannot exceed 33% on the front end and 43% on the back end. And everyone, if you have questions throughout the presentation, please feel free, let me know, and we will address them at the time. An individual must qualify for a loan of a minimum of $130,000. So Allison and Karen, how many individuals do you have in your pipeline that qualify for at least $130,000?
Quite a
Plenty.
few.
And keeping in mind, guys, this is for a brand new home. Okay, so it's important that you understand that. You must also be qualified here at our office. We'll send you through the qualification steps with the city of Houston. So we'll handle that here, but I'm also giving those to you, basically just kind of identifying what those are. Okay, your income has to be between 60% AMI and 80% AMI. Now, what I will tell you is this would be accurate. The 60% area median income, personal income, is accurate unless you're utilizing funds from the Section 8 Housing Choice Voucher Program. So that's important to know. And if you need more information on that, either one of the ladies, if you are utilizing Section 8, either one of the ladies that are on the call at this time are equipped to answer those questions in reference to utilizing your Section 8 voucher to convert it to a home ownership voucher. So that's going to be important to know. And if you know anyone that is on the voucher program, please, again, reach out to one of us, let us know, and we'll walk them through the process as well. You must contribute a minimum of $1,000 towards the down payment and or closing cost. I don't know if Stephanie's on mute, but well, I think she is. Stephanie, where would that $1,000 come from? I know she had a 1230, but that $1,000 could be your earnest money. Just as simple as that. Okay. Down payment assistance amount. Now, this is where I get excited. I love free money, everybody. So if you don't love free money just as much as I do, I think that you may be in the wrong place. We're talking about $70,000. And $70,000 isn't it. So if, for example, you qualify for a $130,000 mortgage and you actually need $80,000, you can qualify for that as well. Before we started this call, Karen told us a story about one of her clients during NSP time that qualified for, I won't spill it, Karen, I'll let you tell.
It was $100,000.
Under the NSP program.
That she ended up getting. She was a 50% AMI buyer. And of course, you know, she had excellent credit because she was an excellent candidate, but the income, she was just lacking the income. And at the end of the day, she ended up getting she ended up getting a $200,000 home with a payment of about $700 a month.
There we go. Allison,
Wow.
I'm sure. Yeah, look, I knew Allison had something to say about that one.
Yeah.
Guys, so with these down payment assistance programs, it really is a life changer. I consider these funds to be a bridge. It's a bridge between what the market says homes are valued and what your approval says you can purchase. Okay. So again, even though the $70,000 is listed here, it can be a little higher than $70,000 in down payment assistance. Okay, so let's kind of talk about TAS Realty Group and Change Happens. So in this particular relationship, Change Happens is the nonprofit organization that was awarded the lots. So they were awarded the lots for $1, and they are acting as the builder of record for this particular project. And TAS Realty Group is their official listing brokerage for Change Happens. There is another nonprofit organization that's building these properties as well. And I do believe that they have 8 lots also. Okay, but we're not their listing brokerage. So I can't give you their floor plans, nor can I give you their lot locations. But I can give you the lot locations for Change Happens. And if you take take a second, you can take a screenshot, whatever it is that you want to do for these particular properties. But these are the locations of the properties that are going to be listed for new construction. We have 3 that are in Acres Homes and 4 that are in City Gas. If you look over to the right, 2 of these are listed as eco properties. And what makes an eco property different from the standard properties is the eco would give someone an opportunity to purchase with either a disabled relative or a senior relative. So it's almost, if everyone is familiar with the Lennar Next Gen home, where you have a home for the buyer and maybe a home for the senior parent with 2 separate doors, these are 2 homes on 1 lot that are interconnected, but each property qualifies for their own source of funding. For an example, house A being sold to daughter A qualifies for $70,000, and mom A for house B qualifies for $70,000 as well. And the secondary house is cheaper. It's maybe $100,000, and then you're qualifying for $70,000. Miss Parker, I saw you come off mute. You had a question?
I do.
Yes, ma'am.
So as far as the senior, would they be an individual like applicant, or like your mother specifically? Like
that is absolutely correct. So they would be a separate application. They would obtain their own loan and financing, and they would apply just as you would with either Allison or Karen, and they would go through the entire process, just as they would be awarded their own supplemental assistance.
Okay.
That's the part that I loved. Here we are, we're bringing next gen properties into the communities located in the city of Houston. I thought that was great. But I also want you guys to pay attention to these lot sizes. I saw Miss Player on the line, and I know she's going to be picking one of these lots, but look at the lot size, 8,500, 8,400. These are large lots. These are not your typical subdivision size lots. These 2 are 6,000, and then you have one that's 8,255. So these are beautiful lots. So wanted to make sure you all paid attention to that as well. So this is the 1939 floor plan. I know that you may not be able to see it in full detail, but I can get this over to you. You just have to shoot me over an email or a message in Messenger at TAS Realty Group, and I'll get this over to you via email. And I just wanted to let everyone know that these floor plans were designed by Change Happens. So these floor plans are not designed by the city of Houston or by someone that doesn't have the consumer's best interest at heart. Each of these floor plans were hand selected, and if changes need to be made, they will make those changes. Now, we did get renderings for one of the floor plans. So this is the exterior rendering and interior rendering for floor plan 2210. And then I'll be able to show you the interior floor plan here shortly. And this is what that floor plan is going to look like. Okay. This is it's a beautifully laid home. It is a 4-bedroom. It is a 2-bath.
Nice.
Yep. And this is the exterior elevation of our, I believe it's the 23, I can't see it because I have so much stuff up on my screen, but it's the 23 something. And this is the floor plan for that one. And this one as well is a 4-bedroom. And I believe this one is a 2.5 bath. But what's really, really unique about this home is it comes in two different exterior elevation. You have your traditional and your modern. Now that modern elevation, I knew as soon as I saw it, I knew who designed it. There's a millennial that is over at Change Happens, and he designed this exterior elevation, and it just turned out to be rather beautiful. Okay. Uh-oh. So what is next? I know you're probably wondering, what in the world do I do to get a hold of this kind of money? Well, the very first thing that you need to do is select your real estate professional, because your real estate professional is going to guide you through the process. Keeping in mind, each of these floor plans that I've shown you are ranging in the high 190s to $210,000. But does everyone see what you must qualify for? Because it says it here, obtain a loan approval for a minimum of $130,000. So regardless to what the price of the home is, you just have to qualify for 130. I don't know. I don't hear anyone shouting. Like I should hear, I'm thinking I should hear everybody saying,
Yes, ma'am. I am shouting. I am shouting.
They're in
I said,
shock.
baby.
Don't want me.
hey, Chandra. Hey, Miss
Hey,
Players.
ma'am.
Allison, Miss Players on the line.
Yes,
Hello, Miss
ma'am.
Player.
Hello, ma'am.
And then, of course, you have to attend a home buyer education class, submit your documents for qualifications, select a lot and a floor plan. With this particular program or these products, you must sign contract before they start building, which is good and bad. The good part is you get to be involved in some of the selection process. So we'll show you product A, B, C boards, and you'll be able to pick your board based on your desires. And don't worry, we made sure that we've I think Alicia was on the line, that we've sat down with the builders and made sure that they are picking products or selections that buyers are interested in. So you will not be disappointed with that either. So you'd be able to pick that, and then you'd of course be able to follow the process of construction. Now, just to be completely transparent, the builders were scheduled to close on the lots on January 28th, and that closing did not happen. So we are waiting to hear back from the city of Houston on when they're going to close on the lots. Once they have closed on the lots, we can then move forward. But it is not too early to start the qualification process. Two of the ladies that are on the line right now are in the qualification process. One of them has already obtained their approval letter, and the other one is in the process of gathering her documents to obtain her approval letter, and we're moving forward. So please be sure to reach out to us and let us know if that's something that you're looking forward to doing. But I don't want anyone, if you're interested in living in one of those two areas, I definitely don't want anyone to miss out on it. Now, before it's asked, because I already know that people are going to want to know, are these going to be the only two areas? And the answer is no, these will not be the only two areas. However, these are the only two areas released today. Once the builders have built in these areas and construction is complete, they will be awarded more lots, and they'll start the same process in other areas. But until then, these are the only 8 we have at this time. Now let's get to it. Anyone have any questions?
I'm just excited. That's all I can say.
Yeah, me.
I'm just overwhelmed and excited.
I'm excited as well.
Goodness.
Good deal.
Up.
Miss Parker, I saw you came off mute. I know Miss Player's excited. I know Miss Williams is excited. Miss Williams and I met yesterday, and Miss Player and I met a couple of weeks ago. I know that they're excited about moving forward. And Allison is already putting her her pedal to the metal. Karen wanted to make sure that I let everyone know that Allison is going to be your Section 8 specialist. So if anyone is utilizing that Section 8, please be sure that you reach out to Allison. Ladies, did I see your information in the chat? Yep, everyone's information is loaded in the chat for any further questions. Of course, you all have my information. Corey, thank you so much for joining us. Thank you. It's been such a long time since we've chatted, but thank you for joining us today. Anyone else with any other questions?
Well, I just wanted to ask real quick. I haven't, I was waiting to, attend this to figure out what steps to take. So I had, for the last year, pretty much been getting my credit together, trying to get my debt to income ratio right. So I feel like I'm 50% there as far as what I need to do on my end, maybe more. So now I'm ready to move forward as far as, I just didn't think I was ready now, honestly. But what you guys are telling me, from what you're telling me, I am basically. Oh, I'm like, what's up?
So here's what I would tell everyone. What I don't want any consumer to do is to make an assumption that you're not ready. I can't tell you the number of individuals that contacted me for a rental property that was eligible to purchase. And I see Karen nodding, I see Allison nodding. You don't really know if you're ready until you know that you're ready, right? So,
well, and if I could add to that real quick, the best thing about Karen's been in the business a long time and we're friendly competitors. We can give you a roadmap. So even if you're not ready, it takes the mystery away of, what do you need to get ready? Things that might be easy or things that were going to be more challenging, but at least that way and then you can start working through it. Right. Sorry, Letitia.
No, you're perfect. That's you are who I said in this whole scheme of things in purchasing a home, your lender is your best friend.
Absolutely.
Right. Abner's your counselor. When you're at that house and he tells you, this house is not, the roof is falling apart, he will stand there with you as you cry. And then we'll come back and tell you, don't worry about it. We'll get the seller to repair it.
Right.
Karen, did you have anything to add about that?
Well, I just wanted to kind of piggyback on what Allison was saying as far as, having that initial assessment is most important because a lot of times people think, just like you said, they come and they think, okay, well, I'm just, going to find another place to rent. You need to have an assessment made of where you stand. If you have a desire to be a homeowner, take the step. It's not going to hurt. We're not going to ask you, for a pint of blood or anything like that. We're very kind. We're not going to, laugh at you or anything like that. But you need to get with a professional so that you know where you are and you can get a plan if you're not ready today, so you can have a plan for tomorrow.
Correct. Anyone else?
Where do I sign?
So, and Chandra, you and I will chat also offline, but I've gathered everything that I need, and the city is aware, and they know that you exist.
Exactly.
So
they should.
So look, that is a plus.
Thank you.
As soon
I
as
appreciate it.
So they launched the program, and the first thing they challenge us with, real estate agents, brokers, is how many people do you have ready to go? How many do you have ready to go? And I was like, well, I have 3 families that we're talking to, and one is absolutely ready to go. Where are you? So they know, Amen. And they know that Miss Player is right on their heels. She is nipping.
I am sitting in the driveway right now.
See all over there.
Good deal. Well, for our industry partners that have joined us, if you have any questions or you have any clients that are interested in the program, I know Corey is still in line. If you have any clients that are interested in the program, please feel free to let me know. We are not in the business of working with trying to take other people's business, but we want to make sure that the funding is utilized, because the way these things work is if you don't use it, then we all lose it. So we don't want to lose it. Go ahead, Allison. I know you have so much to say about that.
Okay, so we recently had a talk. The city of Houston has done a fantastic job getting their programs together. keep in mind, these are government programs. And so what I tell my clients is most of the time you're getting a whole year's salary in 30 days. Keep that in mind as you're going through this process, and you got to send Karen and I that piece of paper you thought you sent it to us for the third time. Just be patient. These programs have weird rules to them. And again, you're getting a 2-year income in 30 days. Just keep that in mind, and that keeps you focused.
Yep.
But recently, Letitia was involved with me and about 5 other people with Harris County, and they only did 20 loans for the whole year, which was the lowest of anybody in the greater Metroplex. Montgomery County even did 35. I think City of Houston is doing what, 35, 40 a month? Letitia?
Right. Yes.
Yeah. So it's working well with the current administration. And I can tell you, it's all politics. So why we have a great mayor in place who's directing this and supports affordable housing, take advantage of it. Do whatever you can to get your credit scores in line, whatever it takes, stay on it. You get a new mayor in, everything can change. As Letitia and I saw the difference between Mayor White to Anise Parker. Anise Parker was not for affordable housing, which is her right. She can allocate, that's her, but our mayor is Sylvester Turner. Darn it, couldn't think of his name. Sorry. But no, he's fabulous. And he is pushing this. They have open door policy. They want this to work. I think Karen's agreeing too. Feel free to add to
family. He's family. So
there you go.
I'm his number one cheerleader.
That's mine too. I love him. I think he's done a great job.
Yeah. All right.
So anyway, I just want to add to it that, you know, don't think it's going to be here a year from now, because it may not.
Right. Okay. Well, everyone, if nothing else, I want to again thank you all for joining us. It has been a powerful power hour. It was a pleasure to present to each of you. Please reach out to any of the individuals that are on this Zoom meeting today for any additional information. But the most important part, or the most important thing to take with you, is today is the day to get started. Interest rates are low and the money is there. You guys have a wonderful, wonderful weekend.
Yes, ma'am.
Thank you for having us.
Bye-bye.
Amazing.